Good afternoon. Let's get right down to business here. We're doing it live at 4 in the afternoon, doing more at 4. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Big day today in the financial markets, and the debate is over. The Fed ending that debate on whether we'll see a quarter percentage point or a half percentage point cut in the Fed's benchmark rate, which impacts business and consumer loans, and turned out to be a half-point cut today. The markets initially reacted by moving higher, but stocks ended the day lower on a choppy trading session after the Fed's big announcement, decision to lower the benchmark interest rate by half percentage point, an aggressive start to what's expected to be a monetary easing cycle. The Dow coming in for a closing loss today of 103 points at 41,503. The S&P 500 ended lower by 16, and the NASDAQ gave back 55 points. The Federal Reserve moving in a big way today to a lower borrowing cost for the first time in 4 years. The Fed's first interest rate cut since 2020, cutting the short-term policy rate by half percentage point, bringing it down to a target range of 4.75% to 5%, and this puts the prime lending rate charged by major banks to 8%. The Federal Reserve cutting interest rates with stocks trading near record highs, leaving investors looking for some historical comparisons to the current situation. And as we look to the path ahead, we'll, of course, be talking more about that coming up this hour. The S&P 500, by the way, briefly traded above its record high close, which we saw on July 16th after the Fed delivered a rate cut of half percentage point today before trimming its gain and ultimately ending lower. The Dow hit a record high on Monday this week and has pulled back the last couple trading sessions. As far as the cryptos go, we've seen a bounce here with Bitcoin back above 60,000 today. We're going big on cryptos this hour with the latest price moves in reaction to the Fed announcement today. Also, new report showing crypto was involved in 87% of all investment fraud over the past year, according to the FBI. New report showing crypto scams ripping off Americans to the tune of $5.6 billion last year. Jason Nelson, reporter at decrypt.co, will be joining me live later this hour. He also covers tech and AI, by the way, and I'll talk to him about the actor union-supported AI deepfake bill that Governor Newsom just signed into law here in California. And coming up later this hour, we'll get an update on one of my favorite subjects, the restaurant business, and I'll talk about it. And I'll talk about it with the biggest name in the world on the restaurant scene, and that would be Chef Wolfgang Puck, whose global restaurant empire includes Spago and Cut in Beverly Hills, Chinois in Santa Monica, and Miroir in West Hollywood. For the first time since the pandemic, he's organizing a mid-autumn festival at Miroir, celebrating the restaurant business here in the Los Angeles area. Chef Wolfgang Puck will be joining us live later this hour. But first, on your money, the markets, the economy, the big Fed announcement today, the jumbo interest rate cut. First Fed cut in 4 years, and the whole works now. Joining us live now, the one and only John Najarian. Dr. J, as he's known on the major financial networks, co-founder of Market Rebellion, including Market Rebellion TV, co-author of the book, It's Not an Option, Learning How to Trade Options is No Longer an Option by John and his brother Pete Najarian. And yes, he has the laser eyes on, too, following the cryptos. John Najarian, thank you very much for joining us live on this big Fed day here today.
It is indeed a big Fed day, and it's always a good day whenever I can be on the radio in Los Angeles or anywhere with you, Frank. So thank you for hosting.
Thank you for this honor, John Najarian. You're terrific, and we always look forward to every time you're on the air here. So thank you very much for taking the call here. It is for us to thank you. And take it from the top, unpack all of this today. It was widely expected the Fed would cut. The question was, would it be a quarter percentage point? Would it be a half percentage point? They came in big today, and this also raises some questions. Give us your reaction to the big news here today.
Well, we were stacked so heavily for months and months at a quarter point cut that just in the past 4 trading days, it went to a majority of traders. As much yesterday as 67% of traders were betting with their dollars, not just with some sort of poll. The traded dollars over at the CME group indicated that traders were betting more and more on a 50 basis point cut. They were right. I thought that a quarter point was pretty much guaranteed, but that guarantee was not the case. They thought they needed more. They needed a little shock and awe, and they did that. Now, the question that a lot of people are asking is, does that mean that some of the other cuts will be more muted? I believe the answer is yes to that question. They will probably cut much smaller and do multiple cuts, given the slowness of the economy right now. For all the talk of, well, the consumer is still resilient. Yes, they are, but they are resilient because of things like Affirm and Klarna, which are two companies, one's public, one's private, that let you buy now, pay later. And that sort of avoids some of the issues that investors, spenders, buyers, and so forth would have with their credit ratings if indeed they're right up against their credit limits. This is one way around that, and I think that's what a lot of consumers have been availing themselves of late.
On the Air Live with Dr. John Najarian. Anything else that you picked up from the Fed's chairman's news conference today? Jerome Powell, after the announcement came out at 11 o'clock this morning, held his big news conference. And what about where the economy goes from here, given this 50 basis point rate cut today? Still trying to achieve that soft landing here, which we've been talking about for quite some time. Inflation, by the way, still running hotter than the Fed's target, and now new concerns about the job picture has emerged, and that's something the Fed's been paying attention to, it seems, perhaps more so than inflation even. What's your assessment of what we heard from the Fed chairman today?
Well, you hit the nail on the head right there, Frank. The Fed chairman, Jerome Powell, said in his news conference more than once, he said that the country needs to be aware that unchecked immigration is pushing up unemployment, pushing it to the upside, the unemployment numbers, because people that are counted in that are basically seeing fewer and fewer jobs open to them, because so many of the folks that have just arrived in our country are taking jobs and taking them at lower pay. So in other words, they're pushing up unemployment and they are pushing down labor, what the reward is that laborers get for working. And I was rather surprised that Chairman Powell and the FOMC chose to speak about that, because that's a pretty political hot potato. Clearly, supply and demand still work in the markets. So when you do see a situation where you've got more workers and they're willing to work, that means that you don't have to entice them or incent them, reward them quite as much. And that's what the Fed chair said, black and white. It was there on the screen on Bloomberg, on CNBC, on Fox for hours today. And I think that's part of the reason the markets weren't as robust, that they feared that maybe unemployment rates will continue to rise and rewards to investors will continue to go down. So that means that unless inflation really does break, given this 50 basis point cut, the real earnings, real wages will be going down versus how much inflation is taking a bite out of their spending.
All excellent points, and Powell did warn not to see this half-point cut as the Fed's new pace. That should be noted. The Fed's growth and inflation forecast signaling the soft landing view, so that's been underlined. We did get some dissent this time by a Fed governor, the first time we've seen that in a number of years. Powell does not see signs of recession risk in the economy, so still aiming for that soft landing. The markets initially rallied on the statement that came out and the decision, but then pulled back as he continued to speak to the reporters there at the Federal Reserve today. We also saw reaction in the cryptos. Let's get to the exciting stuff here now. We see a Bitcoin popping today back above 60,000. Give us your current view of what's happening with Bitcoin and the other cryptos you track.
Well, I think overall what the Fed did, the response to that was as expected, and that is any cut to the interest rate means that what the investment community looks at is the differential between what they can get from, for instance, something extremely safe, like, for instance, U.S. Treasuries and some of the foreign treasuries as well. And cryptos as well as gold do not pay a dividend, so there's virtually no yield. There are ways to create yield for cryptos, but right now, gold and cryptos without any dividend are not paying a yield to those that hold them. And for that reason, whenever we see a dip in interest rates, crypto and gold investors cheer, and they did today. We saw a turnaround from a sell-off this morning in gold to a bit of a rally. Not huge, but this will take weeks and months to play out. And same thing with crypto. And crypto this morning, or in the overnight session, was probably 58,500. Traded back up over 60,000 today, the main crypto, Bitcoin, of course. And I think we're going to continue to see that until the election. And at the election, it's going to depend. Is it going to be former President Trump or Vice President Kamala Harris that gets that brass ring? Whichever one does, cryptos will hinge on that. And I suspect gold, to a lesser extent, will also react to either a Trump or Harris presidency.
All right. Historically, tech names have been very interest rate sensitive, so we saw a mixed reaction there among the Mag 7. And as far as crypto is concerned, what are your observations? You're tracking this very, very closely. The more the Fed cuts, can we expect the higher crypto to go?
Yeah, I do. And especially on some of the speculative coins that are in the top 10 market cap. So I would certainly throw Solana in there. A year ago, or a little bit more, Solana in 2023 was down around, that symbol SOL, was down around 16. And today it rests at roughly 130 some odd dollars per coin. That's an incredible comeback. It's not the all-time high, but I think we'll see more people willing to speculate on some of those digital assets, given that rates came down and are likely to continue to come down. I believe that they're still looking for in the neighborhood of 225 points worth of cuts in terms of basis points, which would translate to about 2.5, 2.25% lower in interest rates. That'd be great for housing, and it'll certainly put a big demand on loans and refis, because people have already seen their mortgage rates go in the last 2 or 3 years from sub 3 to all the way up to close to 8. Now today they were back, before the cut, they were right around 6.15 for a 30-year conforming mortgage. And I think we'll see more of that as we go ahead. We'll see lower and lower mortgage rates. That's one of the things that will help bail out the consumer as well as some of the commercial real estate.
What about the Bitcoin miners here? Any thoughts about some of those names, Marathon and some of the others?
Sure. Marathon, MARA, as well as HUT, HUT8, HUT. Both of those interesting plays. And again, one candidate, President Trump, is the preferred candidate for the crypto community. The other, Vice President Harris, is not the preferred. In fact, anybody who's invested in crypto does not want Vice President Harris to hold that office because she's more in favor of central bank digital currencies, or CBDCs. And those, many of us view that as a way to control your spending and track your spending. And if we had a true digital dollar that was a CBDC, again, central bank digital currency, I think that would be something that people would fear going forward. So again, cryptos would react positively to President Trump. they would react negatively to Ms. Harris taking that top spot.
What are your thoughts about how the Bitcoin ETFs have played out? BITO, for example, BITO, and for that matter, the Ethereum ETFs, which burst on the scene this year?
I would think they both get a lot of traction over the next several weeks from speculators that are not comfortable, again, owning the hardware or software wallets, but instead choose to own their crypto in terms of ETFs, exchange-traded funds that you just mentioned, two of the top ones. There's nothing wrong with owning them in a stock account if you're not comfortable with owning cryptos in your own wallet, but true, DeFi or decentralized finance folks would say you got to have your own wallet with your crypto. Otherwise, it's not your crypto. It could be anybody's crypto.
On the live with John Najarian. So we hit digital gold pretty hard. Getting back to analog gold for just a moment. Good old gold hitting record highs earlier this week, above 2,600. Silver up around $31 an ounce. What are your thoughts here on where the precious metals go from here as the dollar has come under pressure following the Fed rate cut today?
Well, and I think all your listeners, because you've done such a great job of educating, not just bringing them the news, but educating them, they would understand that when rates go down, it makes the currency of that particular realm less attractive. Rates go up, it makes the currency of that realm more attractive because, of course, you could buy that currency and deposit funds and get that higher interest rate. We've just gone now from 5 or 5.25% down a full half point. So it's natural that we would see people selling dollars as well as looking for higher yielding assets. And absent that, what we would see and expect to see from gold in particular, silver secondarily, would be that the non-yielding assets like those two precious metals would become more attractive over time. And that's something that's regardless of who the president is, as long as the Fed chairman continues to cut rates, both those precious metals should continue to move higher.
Yeah, if you just joined us, that rate cut was a 0.5 percentage point today. That's the big news. The market initially moved higher, but then ended a bit lower. At this point, John Najarian, let me ask you the big question here. Any other specific places where you are putting money now and or taking it off the table?
Well, I think that we've seen Ryanair, symbol RYAAY, as well as Delta, DAL, talking about the major input to those airlines has come down somewhat dramatically. Alaska Air, of course, and Hawaiian Air, that's a merger story, but the rest of the big consumers of jet fuel or of any distillate are going to benefit from the lower dollar, I believe, as long as China and so forth has put up some relatively weak numbers. We are unlikely to see a massive jump in crude like we saw last year and the year before. So crude this week got back above 70. I would say keep an eye on that as sort of a line in the sand, 68 to 72. As long as, sorry about that, as long as we see crude oil lower than 70, it's going to be very bullish for truckers, shipping companies, cruise ships, and airlines.
Let them truckers roll. 10-4. John, thank you very much for joining us on this big day here today, and we'll be looking for you on X, formerly known as Twitter, and following the options actions as well. And congratulations on your latest book. It's Not an Option: Learning How to Trade Options is No Longer an Option, by John Najarian and his brother Pete Najarian. John Najarian, Dr. J, as he's known, on the major financial networks, co-founder of Market Rebellion, including Market Rebellion TV, and big on X, formerly known as Twitter. John, thank you very much for taking the call this afternoon.
Always my pleasure. Thank you, Frank. Have a great evening, everybody.
Thanks very much, John Najarian. And let's get right out to the freeways now here back in Los Angeles, 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Big day today with a big Fed announcement announcing a 0.5 percentage point cut in the benchmark Fed funds rate, setting the Fed funds rate lower for the first time in 4 years, and the prime lending rate charged by major banks moving down a 0.5 percentage point to 8%. The stock market initially reacted by moving higher. The Dow was up a couple hundred points, ended lower by 103 at 41,503. The S&P 500 closing down 16 at 5,618, and the Nasdaq down 55 points today at 17,573. The yield in the 10-year note ticking slightly higher at 3.70%. Taking a look at the cryptos here now, Bitcoin up about 600 at 60,682. Ethereum up 17 at 2,344, and Doge at the moment at 10 cents. Gold pulling back here and after hours trading now down 15.30 at $2,583.30 an ounce. Silver down 21 cents at $30.48 an ounce. Apple up nearly 4 today at $2.20 and change. Nvidia, the so-called Magnificent One, down more than $2 at $113.37. And now the latest news here on 790 KABC. Mottek On Money continues here in 790 KABC. Turning now to the Main Street economy and one of my favorite topics, the restaurant business. And we'll talk about it now with the biggest name in the world on the restaurant scene, and that would be the one and only Chef Wolfgang Puck, whose global restaurant empire includes Spago and Cut in Beverly Hills, Chinois in Santa Monica, and Merwa on the rooftop of the Pendry Hotel in West Hollywood. For the first time since the pandemic days, Chef Wolfgang Puck is organizing a mid-autumn festival at Merwa, celebrating the restaurant business in the Los Angeles area, and he's bringing some friends along too. Chef Wolfgang Puck, thank you very much for taking the call this afternoon.
Good afternoon. So good to talk to you. I'm so excited. You know, this whole Mid-Autumn Festival is this Friday up on the rooftop of the Pendry with an amazing view. And I have 9 of my favorite restaurants, some traditional, some really new ones coming to cook, and everybody is making great food. So it's going to be a lot of fun Friday from 7 to 10 o'clock.
That's Friday. Very exciting. Very exciting for the first time in 4 years. So I'm delighted to hear that this tradition continues. We want to talk to you about the big picture here, since you have the global view of the restaurant business. But certainly I know you're excited about this big event coming up. So it'll be your restaurants as well as others, right?
Yeah, totally. Like, for example, I have Merwa is doing their famous Peking duck with plum chutney and the crispy suckling pig. And I have Kat, who is doing a Wagyu braised oxtail croquette, and we have the Lonely Oyster, shucking oysters and grilling oysters. Nancy Silverton is coming to make her famous desserts. Mr. T, one of the new restaurants in town, a very successful one, is doing a hamachi crudo and braised short ribs. The Pizzeria Say, they're making a pizza. I think they're fighting with me with the yellow pin tuna pizza. And Chinois is making stir-fried garlic chicken with crispy onions. Spago is making a short rib, cannelloni, bad mashed butter chicken, and the list goes on. And Merwa also going to have an amazing dessert buffet because we have a great pastry chef, Sylvain, over there. So it's going to be fun, and you can eat in 9 or 10 restaurants in one night. Get a little taste of Los Angeles. I think it's great to bring the restaurant community together and show our guests that we are open and going strong again.
That's wonderful. And from the rooftop of the Pendry there at Merwa, you can honestly say you've seen all of Los Angeles from that beautiful view up there.
Absolutely. Yeah, the view is so amazing. I mean, when LA is lit up, it's beautiful. You see from downtown to Santa Monica, and it's really a special place. And people love to go there, even for dinner, sit on the window side and have the view in front of them. So it's great. And the food is great there, too. But this time it's really a special night, so to have all these chefs in one place. So the whole rooftop is open on Friday night, just with all the chefs. Everybody has a station. You're going to be able to talk to the chefs and get a taste of their food.
That's wonderful. Well, congratulations.
Thank you. We have a great bar and all different wines. So we have cocktails, maybe a glass of white wine with the oysters, maybe some red wine with the Peking duck or with the cannelloni. So it's going to be great. And I know Bella Chinois is all excited already to come, and all the chefs too. So it's really, I'm happy to start it again because we started it before the pandemic, and now finally we can do things like that again.
That's wonderful. We're on the air live with guess who? Yep, celebrity chef Wolfgang Puck celebrating the Mid-Autumn Festival at Merwa on the rooftop of the Pendry in West Hollywood coming up this Friday. And I'm excited for you there, Chef. And for the first time in 4 years, we've been doing these conversations for many, many years during the financial crisis, through the pandemic and so forth. And today, for the first time in 4 years, the Fed cut interest rates in a big way by 0.5 percentage point. Have you heard that news? And obviously, they're trying to get this soft landing here for the economy. You're on the front line of the global economy here. So give us your view of things here at the moment.
Well, I really believe that was an important point to do 0.5%, not 0.25%, so that we give some confidence in the economy. Hopefully, the stock market will get up a little bit, and it will help everybody and give everybody more confidence to go out and spend money. Because this summer was really a slower summer than after the pandemic. And in July, for example, in Los Angeles, Las Vegas, not as many tourists as the years before because a lot of people went to Europe. But I have great hope. September is already much better. People are booking parties and so forth. So I think the economy is definitely landed softly, hopefully. Hopefully we don't have any bigger problems. That it's by the fall, by the holiday season, we're going to have really good business and people are going to spend some money on parties and so forth.
Of course, the Fed focuses on inflation and also the job picture, something that you focus on very closely as well. Can you give us an update? Is inflation easing as far as you can tell? And what about the job situation there impacting the restaurant business?
I think inflation is definitely easing. Hopefully prices don't get up anymore. We all know everybody wants more money, all from the truck driver who deliver the food to the people who pick the strawberries or other vegetables, to the butchers, whatever, all the people who are involved in the food business. So everything went up. I know delivery is super expensive now, and we have to charge the customers because if not, we don't survive. But I have really great hope that the economy is stabilizing and getting better because I see already people are booking parties at Spargo and people are booking parties up at Merwa. So I think that is really a good sign that people want to celebrate, people want to do things and spend a little money. But employment is also better now because I think a lot of restaurants are having a hard time, and so there are a lot of people out there, qualified people, to hire. And I think that's an important part for us in the restaurant industry because after the pandemic, a lot of these people didn't come back to work in the restaurant industry. They went into construction and manufacturing jobs and so forth where they don't have to work on weekends, where they can spend the evening at home with their family. So it was hard for us to attract people, but that is changing, and now we can get really good qualified people who really enjoy to be a waiter or enjoy to be a chef.
And what about the catering business? Has it fully rebounded? Of course, nobody does it better. You're the one that handles the catering for the governor's ball on Oscar night, and you've been doing that for decades. How's that business going?
I think catering is really slowly coming back. It is not really in full swing yet, but we got great bookings now for the rest of the year. Starting in October, I think we're going to be very busy. People are going to have their Christmas parties and their Hanukkah parties and so forth. So I think it will be a good fall, a good holiday season. I am very positive. I'm very positive that we're going to have a very strong fourth quarter because the middle of the year, July, August, from June on, was not as strong as we expected it to be, especially in places like Las Vegas. But I think it's coming back now. So we are really very hopeful to have a good end of the year.
Chef, thank you very much for taking the call. It's always a thrill to speak with you. You are the hardest working guy in the restaurant business. With your global empire, and again, congratulations on reinstating the Mid-Autumn Festival at Merwa on the rooftop of the Pendry at West Hollywood this Friday, and people can get more information about that, I see here at pendry.com/West West Hollywood. Chef, thank you very much for joining us live here this afternoon.
Okay. Thank you, Frank. Good to talk to you. And let's keep our finger crossed that the economy is picking up. I think if you tell everybody the good news, I think people will feel more confident. So Mottek On Money is important to tell everybody that we're going to have enough money for the rest of the year.
And we're going to eat well, too, and drink well, too, Chef. Cheers to you, and hope to see you on Friday. Thank you very much for joining us live this afternoon.
Friday, yes. Thank you
Wonderful.
so much, and see you on Friday night. Okay.
Thank you very much, Chef Wolfgang Puck, live here on 790 KABC. Mottek On Money continues here in 790 KABC. Bitcoin back above 61,000 this afternoon, up about $1,100 at 61,224. Ethereum also getting a lift today, up about 30 now at 2,356. Doge at 10 cents. Let's dive into the cryptos now with the crypto expert here, Jason Nelson, reporter at decrypt.co. Following the latest moves in the crypto prices today, following the big Fed announcement of a 0.5% cut in the Fed's benchmark Fed funds rate, which impacts business and consumer loans, as well as the financial markets. Jason, thanks very much for coming to line. It's been a while since we've chatted behind live microphones. Give us an update on what's happening in the crypto world.
Well, right now, Bitcoin is over $60,000, almost hovering around 60,919. It jumped about 1.35% since the Fed's announcement. Right now, you have a lot of chatter around Bitcoin, primarily because of what former President Donald Trump is doing with promoting cryptocurrency and embracing that sector, and that's had a positive influence on the market. It looks like.
All right. So Ethereum has been under pressure lately, hovering at around 2,300 at last check. What about Ethereum here?
It's kind of hard to say because different cryptocurrencies have different ecosystems surrounding them. The market, by and large, has been down a lot lately. We just started seeing more bounces relatively within the last few weeks, coming back up from a downturn. The former president embracing cryptocurrency has helped a lot of projects rebound.
All right. Did I hear a Shiba Inu in the background there a moment ago? What about some of these altcoins, meme coins that have taken the spotlight in recent years?
Well, meme coins will always be with us. I think right now a lot of the attention is primarily focused on Bitcoin and Ethereum.
All right. What about the miners that are also getting attention these days? Marathon and Riot and some of the other names. What are your thoughts about those?
Well, it's being a miner is still productive and still a lucrative business to be into, especially when you start considering the miners who are looking at renewable energy, things like that, that bring down costs and also being less of a drag on the environment.
All right, another thing we wanted to ask you about, I saw the report showing crypto was involved in 87% of all investment fraud over the past year, according to the FBI. A new report out showing crypto scams ripped off Americans to the tune of $5.6 billion last year. What's your reaction to that big news here?
Well, it's a very big number, but unfortunately it's not surprising considering it's not so much that there's a rise in crypto crime, it's just there's a rise in cybercrime in general. And what the FBI pointed out was that a lot of these scams are primarily cyber scams. And then crypto, because it's transacted through the internet, can be, like you don't have to worry about cash changing hands or going to banks and stuff. That's the primary tool that a lot of these crimes have been using. What I thought was interesting about the FBI's report was that it also broke it down in age groups. So, for example, the millennials were frequently targeted by investment fraud scams, and then that was followed by Generation X, and then the people who are in their 60s and older amounted to about 22% of the people targeted by these kind of scams.
Very interesting. And the FBI has reminded us that if anything, crypto is traceable, right? So hopefully they're nailing some of these crooks.
It is still, unfortunately, a profitable thing. You're going to see more scrutiny from law enforcement, I feel, in the next year or so, because as this becomes more mainstream, you're going to have more regulators and more law enforcement agencies really clamping down on how this stuff moves from point A to point B. And you have quite a few analysis outfits already out there monitoring blockchain transactions as it is. So being able to track blockchain transactions is only going to get easier.
All right. You cover tech and AI as well for Decrypt. And what about this big news here in California? The governor signing into law this SAG-AFTRA Actors Union supported AI deepfake bill that was just signed into law.
Yes, he signed 2 bills into law. One that would protect from, well, basically, if you're going to enter a contract with an actor or performer, that person has to have legal representation or union representation during the contract signing so that they have a clear understanding of what it is they're signing. The other aspect is in relations to unauthorized reproductions of likeness, and that includes living and deceased performers that if a person were to create one without permission, they could face fines of at least $10,000 per incident.
All right, Jason, thank you very much for that important update and your article about that at decrypt.co. Jason Nelson, reporter at decrypt.co. Thank you very much for joining us live here on Mottek On Money on 790 KABC. Stay tuned now for the 790 KABC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on 790 KABC.
The Bigger Pockets portfolio of podcasts are worthy of your investment.
What is the path of least resistance with highest ROI?
New episodes available every day.
People oftentimes are paying very close attention to what the Fed does to get signals on what's going to happen with mortgage rates, and it's completely wrong way thinking.
Whether it's real estate, on the market, rookie, or money.
And you can make just 6% on a deal. You can retire next month.
The Bigger Pockets podcasts are on YouTube or wherever you listen.